Hello, what up, Hyperchange? Welcome to another live stream. Let me know if you can hear me okay with a thumbs up. Um, just want to wait for a second for everybody to get involved. This is an epic day in the market. The S&P as I'm starting this live stream is down 7% with about an hour to go in trading. Literally never seen this in that like I've been investing for like over 10 years following the markets. I've never seen a 7% drop that I can remember in one day. Like this is crazy. So much going on here. I'm not going to say the name of the illness that's affecting the global economy because my video will otherwise get demonetized. So we'll call it like number 19 as lingo to discuss this. But so much going on right now. I think at a high level, the first thing that I'm seeing right now in the market is just uncertainty about this number 19, trend that's going on in China and all across the world and spreading, and just what does that mean for the global economy. Anytime there's uncertainty, that is what spooks the markets the most. Is just lack of knowing what's going to happen in the future. I think the biggest thing here is we're seeing countries like Italy and China already, but do this sort of mass quarantine thing. And people are going to stay home from school, they're staying home from work, and it's not even actually the sickness itself that's causing this massive catastrophe, but it's this shutdown, which is going to impact the economy. So that's one aspect of the uncertainty. The other aspect is like haven't been testing this enough, at least here in the US. So we don't know how many cases there actually are. Then I was just watching CNBC clips earlier today with an interview with Kyle Bass, who was explaining about how there's about 900,000 hospital beds in the US. 600,000 are occupied at any given moment. So the real sort of economic and way this could break the system is if there's a ton of people to get sick all at once, that overwhelms the healthcare system. That's another potential sort of, tail end effect of this black swan number 19 sickness impact. And so much going on here. And then at the same time, over the weekend, what really is also totally rattling markets is this oil crash. So we have Saudi Arabia and Russia getting into is what I'm reading, getting into like a pricing war essentially of oil. Those are two oil-based economies. It's how they make all of their money. And the more oil they move, the more money they make. They have a lot lower cost of producing it than a lot of other people, namely U.S. shale producers who have a higher cost of production. Therefore, they're going underwater the soonest. There's this really good saying that's like the only way to fix $25 oil is for $25 oil, meaning that as oil drops, all of these higher cost producers get taken out of the market, and then things will rebalance supply and demand, with only those super low cost producers staying able to stay afloat, which is typically governments like Saudi Arabia and Russia, who can hold on the longest. That's why we're seeing huge declines in every single major oil company. This is something that I've been trying to tell my Grammy this for so long. She has all these oil stocks paying her dividends. I'm like, yes, I know the dividends there and it's been increasing, but that's the only reason you own the stock. If you look at the payout ratio, if you look at the leverage, they're all headed in the financials. They're all headed in the right direction. And now the underlying equity of those companies are just getting hammered because of this oil price drop. And you're seeing that these are the most safe and secure and biggest companies in the world. These oil titans are actually totally unsafe and secure because they're hyper levered to the price of oil. Oil starts collapsing. They're going to have to increase leverage, or their entire balance sheet system sort of starts to fall apart and crumble. And so you can have a downward death spiral there, where they need more capital, their reserves are falling in value, et cetera, et cetera. So things are not looking good for oil stocks as governments are getting involved. And that's also tying into another layer of this is, oil consumption is typically historically been gauged as like a huge sort of metric to see how the economy is doing. If we're buying more oil, that means people are driving more. That means commerce is picking up. That's a good sign for the economy. But I think demand for oil is shrinking as we sort of have this, number 19 illness contraction. And as that occurs, that's putting even more pressure on this oil situation. So these two events are related. And then you have every sort of company that is, gatherings in public places, airlines for travels, hotels, restaurants, all of those sort of things, retail stores. Are the market's getting spooked about those businesses because they don't know how long this could last. People are wondering, is it going to be months? Is the weather going to warm up? Is that what's going to, cause this all to die down? Another crazy piece of news we have today is Robinhood is down. I don't know if you've been following this, but Robinhood, the stock app that's worth like $8 or $10 billion, thousands of people using it, totally, or I think millions of people using it actually, totally is blown up recently as one of the hottest startups in the country. I actually put out a video that I never really liked Robinhood because they always say they're doing free trading, but their main way they get revenue is by selling your order flow to hedge funds, who are actually like scraping tiny pennies off of every single trade you make, which I think is messed up. So I've always had beef with Robinhood. And one of my curiosities about apps like that is if you're putting your money with an app like that, like this is your savings, this is your brokerage account. Like this, I use a Vanguard for my broker, and like Vanguard's been around forever. They're super trusted, huge institution. Like just, I have third party, like I have collateral party risk. Like I don't want my brokerage to go out of business and they have all my money. But if that's why I don't like using these like little apps that are startups that are losing money themselves, who've only been around in a bull market. It's like, no, like if things hit the fan, I'm not sure Robinhood's going to stay in business, and then that's when I'm actually going to need my money. So I don't like to put my money in those kind of apps. But now we're seeing a new problem pop up, which is Robinhood's somehow system is getting overwhelmed. They're just literally crashing. It's happened twice now where you literally can't even access your portfolio of stocks. So I think that's totally scary and spooky and adding into all of this crazy panic and hysteria that's going on right now. Um, so anyway, so I haven't sold any of my stocks. I'm just hanging on here. Um, I do have like a tiny bit of cash, which I'm thinking about buying. But then I'm also like just waiting and kind of sitting on the sidelines. I mean, I hate to like, my viewpoint is like focus on companies, analyze those individual companies, don't try and predict what the overall market's doing. But I feel like I'm stepping a little bit out of that rule recently just because this is such a crazy situation. I mean, it's like another thing we can talk about is the Federal Reserve just cut their benchmark interest rate. Then the bond started plunging again. The U.S. 10-year bond is like well under 1%, just keeps going lower, lower, lower. And these emergency rate cuts only happen when things are getting really bad for the economy. And so now I'm thinking like, is the U.S. headed for a negative interest rate policy if things continue to get worse because of this number 19 illness? That spills over and affects the economy. Therefore, we need to continue cutting rates. All of a sudden, the U.S. does basically like what Japan and Switzerland and all these other countries were doing, goes NERP, negative interest rate policy, which is this crazy. People pay you to take on debt. Like it makes zero sense. It seems like a symptom that the financial system is really breaking in a lot of ways. But I'm worried that that's where we could be headed too. So there's so many different fascinating layers here to this once in a kind sort of black swan moment for financial markets. This is why it's, everyone's always trying to predict when the next recession is going to happen. Nobody saw this coming at all, like straight out of a sci-fi movie pandemic sort of, crash. But anyway, so I personally have been freaking out all weekend about this number 19 thing. And if you're just joining us, I'm calling it that so I don't get demonetized, but we all know what I'm talking about here. And I don't know, but there's a couple things I've been looking into it more and more. I think the fact is that there has been a lack of testing kits. So as testing kits become more prevalent, the amount of cases is going to go up, not because the disease is spreading, but because a lot more people are getting tested. Additionally, could they be overstating the death rate because you're only getting tested once you're a certain level of sick and a lot of people are just getting it and nothing's going wrong? I don't know. I'm sort of been waffling on this like, are we totally over freaking out and panicking about this virus? Is it not something to be concerned about versus is it something to be concerned about? Is this a new normal where the economy slows down in this weird dystopian like social distancing way for months and months and months, and that has a real impact and that'll really slow GDP and corporate earnings, and that is a real reason for the market to get spooked out about what's happening? Or is this just going to blow over in a month and we're going to be like, oh, the virus wasn't even that bad, it stopped spreading, the weather got warmer, the death rate was way overstated? So I don't know. I just think this uncertainty is what the market's grappling with, and uncertainty is what spooks the market the most, I would say. Um, no one knows what the bottom will stop at. Yeah, I mean, I did look at the stock market's chart from a year, and if you look at it from like the past year, it's still like flat. So even and it's been on a massive decade-long tear. So I think even as far as pullbacks go, like I'm not convinced that this is even that bad, and it could get way, 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 way worse, and it would still not freak me out. And I'm like, what I like to do in times like this is like, or what you should always really do is have your like list of companies that you really like and would add at certain prices. So I have a bunch of companies I'm watching. Obviously, I love Tesla. I have an absurd amount of Tesla stock though. Tesla stock's been holding up really well in all this news. But I also have like Spotify, Square stock, Snap. These are all companies, and Twitter, like I really think are awesome companies and investments, but have just been a little too richly valued for my taste. But as these come down, I think you want to be looking for these still good companies that become on sale in a time like this. So that's kind of how I'm personally thinking about my own portfolio. I do think it's interesting about Bitcoin because if the US goes negative interest rate policy, is that good or bad for Bitcoin? That's something I've been grappling with. I had been buying a little Bitcoin, which now I'm down on because even Bitcoin's crashing. I guess almost everything that could be perceived as a risk on asset is crashing right now. I'm not buying Square today just because I'm waiting on the sidelines. I do like Square. That's like Square and Spotify are like, I really think those are two incredible businesses like at a pretty fair price, but I'm just like, I don't know. I'm just kind of spooked out about this, but maybe that's me being, freaking out, buying into the hype too much. If you have any questions, please leave it below. That was sort of the end of my rant. I think from a financial perspective, what will this number 19 thing do? Why are people freaking out? An overwhelming of the healthcare system, potential near-term slowdown in the economy, putting a lot of businesses out of business, and that is what's spooking people out. So I'm going to go through some of your questions now. Time to buy Exxon. Good luck with that. Yeah. So, do you think the Tesla supply chain has been impacted this quarter? That's a very interesting perspective because Tesla did mention that on the conference call that if things got worse, there's potential for their supply chain to get impacted. I think this is something that Tesla could affect them, but it's actually every company could really get in this mode of like, well, if everything's built in China, if things continually slow down there for for however long they are, these supply chains are going to get interrupted. That could affect the manufacturing ability of companies. We're already seeing Apple say that they're not even going to be able to build enough iPhones to sell because of the problems in China for Q1. So this is already a sign that that's sort of happening. And yeah, I what actually one second. So I actually kind of have a hot take on Apple or on this whole China coming back to work thing because a lot of people have been posting about how Tesla's factory is back up and running. People are going back to work in China. I'm sort of the camp that actually like China's economy is in kind of a much more fragile state than people think, and they need to get everyone back to work ASAP because their economy just cannot afford to stall. It's a little too over levered, and so they're pushing and forcing everyone back to work. Maybe making it seem like the virus is better than it actually is, just because they want to get things going again. Like they want to get production back off the ground. That's sort of what the skeptic in me thinks. But at the same time, I'm like, or are we freaking out about this way worse than we should be because China has already gone through this initial wave of cases, implemented some of these new social distancing laws, and now they're doing fine, and now everything's working and kind of slowly getting back to normal already. That would be an amazing scenario if in a month everyone's going back to work. But we're in this weird limbo mode because everyone I know, I'm sure if you're in the U.S., there's this debate of like, I'm in New York City, and all my friends are getting emails of like, get ready to stay home from work. Like they're either telling people to stay home or they're getting people ready to stay home. So in the next week or two, as the amount of cases skyrocket because the testing skyrockets, I think everyone's going to start staying home from work, and we're just going to get in this really weird limbo period. And it's like, what's the plan after that? That's what I keep asking people. Like, okay, so we're all going to stay home, or everyone's going to start working from home, and then indefinitely, like until there's no more cases. Like it could be months that there's this thing is still floating around. Is everyone just going to work at home for months while that happens? I mean, that's I don't know. I maybe that the economy won't mind that, but I feel like that has a bunch of different weird second layer effects that are really hard to quantify. But on the flip side, is everyone going to the store and buying as much as they possibly can because they want to stock up for this virus? Yes. Like I've been ordering so many Kind bars on Amazon just because I'm like, okay, well, if things go crazy, like at least I have my stash of food. So I don't know. And I think like everyone's buying toilet paper and going to the stores, and like a lot of the stores are selling out of like hand sanitizer and soap, and like so I don't know. I mean, there is some good sides to the economy. Elon Musk tweeted that the coronavirus hype is dumb. I mean, I hope he's right, and it's really not a big deal. But I don't know. It's one thing to try and get smart and predict a financial recession and crash if it's like some economic theory that you have that you're just in your head about of like, oh, well, I think interest rates are this and S&P earnings are too high and that's why the market's going to crash. Like all of those BS theories, I think that is lame to try and predict the market. But when it's like, wait, like this has never happened, we're talking about more than 50% of people who go to work in America potentially staying home from work because there's this massive virus that nobody wants to get and nobody's taking planes anymore. Like that is a real concrete economic impact that we just can't get over. And it's like, yeah, but like I was saying at the beginning of the stream, there's only about 300,000 available hospital beds in the U.S. And so, I mean, if you think about what that means, like if 100 million people get it and only a couple percent need to go to the hospital, that still would totally overwhelm the healthcare system. And so, yeah, Tesla's capital raise is looking genius because of this, which is epic. Yeah, looking very timely now. Um, yeah, any more questions? Oh yeah, I am working on the new Hyperchange logo. I want to do like a whole rebranding where it's like I want to make my videos crispier, like better audio, better video. I'm gonna put out a new logo. I'm gonna rebrand my website. Like it's just gonna be a next level like Hyperchange 2.0 thing. So anyway, that's coming. Thanks to whoever asked that. Do I think Tesla stock will go down more? No idea. What's up, Germany? Q1 deliveries. I don't know. I'm gonna be really curious to see. Oh no, I didn't see the super chat. Did Trent super chat? Um, Sorry, Trent. I'm scrolling. Flu season is wash your hands. Oh yeah. Well, hopefully when flu season ends, this all dies down, but I'm not counting on that. So will Tesla's Q1 be impacted? This is, I think, a very interesting question for all those Tesla people watching. And this is one thing that I've been curious about. Okay, so it looks like the China factory is slowly getting back off the ground. There's no doubt that's been delayed. We have Model Y starting deliveries here in a couple weeks in the U.S. We have Model 3. So I don't know. I'm fascinated. That brings me to the high level of like we have to wait until Q1 earnings to really see what's happening because right now this is all happening Q1. We don't actually know the real financial impact. It's all guesswork. And I think that's, like I said, market hates uncertainty. We're on the cusp of every company getting on their conference call being like, "Yep, the number 19 illness happened. Here's what's going on with our business." Apple's going to say we couldn't build as many iPhones. Tesla's going to say our Chinese factory was slower. But what is the actual hundreds of millions of dollars of impact swing on the financials of this? Is Amazon's earnings going to go up because more people have been ordering packages to stock up on stuff? There's just so many different effects, and I think some companies are going to benefit positively. A lot of companies are going to get seriously negatively impacted. I mean, but some of them, the positive ones that I think are funny are like Netflix because everyone's staying home watching Netflix, Zoom because everybody's doing video calls and video meetings now. Lots of very interesting stuff here. Any more questions? I mean, at a high level, I do think that this is going to blow over eventually, and like all stock market crashes, like it seems like the world's ending and we're all panicking. But in the long term, I think we'll be fine. We'll recover. This It's really unfortunate and sad that this is occurring and that people are getting sick. But in the grand scheme of things, will it matter? I don't know. There's still 37,000 people dying in the U.S. each year from traffic deaths. So the amount of like there are more people die from the flu every year than this. So yes, if it gets much worse, it could become a real thing. But for now, like based on the data, it's still mostly like hype and not reality. And people's fear of the actual number 19 illness will have a much bigger impact on the economy than the actual illness itself, unless it really does spread and like overwhelms the healthcare system. At that point, I think then it gets into like a phase 2 of an even uglier thing. Yeah, my smoke detector is disconnected because my roommate made steaks and that kept going off. So, um, what I'm personally hoping Tesla goes like under 500 because I don't know, my average price on Tesla is like 250 per share. So, and I've like I poured every single dollar I had in a Tesla last year, and I'm still like barely have any cash because all my cash I spent on buying Tesla. So I don't want to like buy more now at more than double what I originally paid for it while I think the economy's free falling. Like that's not. So I'm kind of holding off on Tesla, but like secretly I'm hoping if things get worse that Tesla crashes like to like 400 or 300 and like Bitcoin spikes, so I can like sell my Bitcoin and get into more Tesla. But like I don't know, like I bought all my Tesla in the 200s and 300s, so I'm here at like at 600 or 700 with a real impact to the economy going on. Like I'm not like just like levering up to buy Tesla right now. But I am, yeah, I'm kind of, and I'm not selling it either. Like my take is like be super patient, think long term. I still think there's a lot of upside long term at these levels, but I also am kind of like, I'll if it starts to crash, I'll buy a little more. But that's kind of how I'm playing it. Um, yeah, why don't I buy? Yeah, these are all interesting questions. But how many Tesla shares do I have? I don't know if I want to say that. Any news about Battery Day? Will Battery Day get delayed because of this? Who knows? Um, any more questions? I would say the one thing that I'm watching for all this is people who think they can predict the future. That's you to nobody knows if this is going to get way worse and the market's going to crash another 20%, or if this is all just a panic and freak out and it's going to go up tomorrow. Like nobody knows. So the only people to be wary of are the people who's telling you that they know what's going to happen. Like I just think it's uncertainty. I'm like looking at this as just like a fascinating business economic learning case. And I think that's how you should always do it. Like, student of the game, like, I'm pretty young, want to be investing for decades to come. We're totally going to get through this. This is like a fascinating, once in a multi decade. We've never really ever seen this sort of, we're so globalized as an economy. We have the digital internet news cycle, the fear and panic, social media. I mean, we're really in a new era and uncharted territory here economically for just a really fascinating just scenario that's playing out right now. So I'm just trying to learn and sort of, soak in as much as I can from here. Chris, thank you. I will buy a Snickers bar. Appreciate that. More of a Milky Way guy, but what I think of Jim Cramer, he's all right. Do I think this will affect Battery Day? I don't know. Worst to worst, can we see another '08? We can totally see another '08. You know, I don't know. It could get ugly. I mean, I think it's just so unknown. Like, I think where this gets really bad is if it overwhelms the healthcare system and if people can't go outside or like stop going outside. Like I was just out in New York City. Everyone's still going to bars and going out to restaurants and like partying at night and like the economy's thriving. Like, but in Seattle, where it's a little bit ahead, people are going out way less, way less restaurants. I think that trend could continue here. And like that has a real impact on the economy. And that could make this like an '08 style financial crash. And how long does that take to recover? I don't know. And then I think this whole interest rate thing is a really fascinating layer on this. The oil price war, which will then cause oil companies to go bankrupt, which could actually then have its own spillover into the economy because if all these people have their retirements in Exxon stock and then all these oil companies crumble and go bankrupt, then that's actually all these old people's retirements are going to be gone. And then they're going to, so these it's to me it's all about how does this like financial freak out actually start to have tangible monetary impacts on the economy. Thinking about it through that lens is the fascinating way that I'm trying to analyze it. Should Tesla worry about hacking their IP? Will this matter for Q1 earnings? Is it built in? I think this is the Q1 earnings freak out. Like the market pullback right now, the market is saying like, wow, Q1 could be a disaster. We are freaking out and we're getting ready for it. And that's why the market's crashing, is because it's pricing in just this Q1 earnings. Oh, my mic. I have a different mic right here. That's another mic. That's why I'm not using that. Tesla tractor and Giga battery for farmers. What are your thoughts? I love that. Tesla tractor, loving it. Are they going to build that anytime soon? Totally not. But I love it. Like I tweeted about a Tesla micro boat just because I think that would be so cool, like a micro little electric boat. I just think there's so many different ways that Tesla, like crazy products they could create in the long term. But anyway, don't get me sidetracked on that. Favorite aspect of Tesla's upside, you getting a call, like we're saying, the tractor, the boat, you get a call option on Elon Musk's brain when you buy Tesla stock. Like, it's not about the products they have today. It's about like, what will they come up with next? What will Tesla be inventing in 5 or 10 years from now? What up, Tesla Daily? That's what gets me most excited about Tesla. Like that optionality of what's next, that the financial markets, this is the innovation of like the great entrepreneur like innovation premium that Wall Street cannot fathom. This is like one of my perfect I'm so happy whoever brought this up, of like, why can people not put Tesla on a spreadsheet and not get it, but yet someone who just thinks about the company will get it? And this is like a perfect example why Wall Street's so dumb and stuck in their ways and does not get innovation and disruption, is because they cannot put on a spreadsheet what Elon Musk will invent next, the next product he will announce. Like even the solar roof, they don't even get that, but they don't even realize this vision that like every roof will come alive and be generating energy in the future. Like this is a different future. It's a market that has never existed. They can't model it. There's going to be more and more products like this, like the Mega Pack that Tesla came out with. These are products that don't exist yet that are going to generate billions and billions of value. The Model 2, the next generation of Tesla's battery tech, is going to that's going to be their best selling product in 5 years, and they haven't even talked about it existing yet. And so I think this call optionality on Elon Musk's brain, where, the value of this battery technology, of the powertrain technology, we've just scratched the surface of monetizing it. And Wall Street can only fathom the monetization layer that has been announced by Tesla in the form of a consumer product, when in reality, the monetization layers will continue for years and years beyond that, with more and more products beyond that for years to come, if that makes sense. So this lack of being able to think about the things that don't exist yet is what crushes Wall Street. It's why they don't understand disruptive innovation. And it's why when I buy Tesla stock, I'm like, Elon Musk is 48 and he's going to have a decade or 2 decades more of these game-changing, world-changing products that will take another decade or 2 decades to be fully realized financially, their value. And so that's why I love investing in technologies and entrepreneurs, not companies and business models and spreadsheets, because technologies are always ahead of the curve in terms of that monetization. Waiting until you see the profit numbers come in on that 10Q or 10K SEC filing is too late to have realized that disruption. The value will already be accrued. And so I'm trying to think about what will drive billions of dollars in profit on Tesla's income statement in 2030, because the market's realization of that billions of dollars of future profit is where the equity price appreciation will occur. And so that equity price appreciation occurs as they price that in, and I think they're going to slowly be pricing in more and more of that technological disruption. That's why I'm so fascinated by SpaceX, and I would love to, and I would kill to buy SpaceX, because the monetization of that launch technology is a huge lagging indicator of the actual true intrinsic value of that technology. And that's why I think the value to launch and reuse rockets is a potentially multi-hundreds of billions of dollars worth of technology that SpaceX is innovating, that their pace of innovation on is moving faster than anyone. They have a huge opportunity to capture, and that you can't look at their launch business and their financials today and try and value them based on that, because that's totally inaccurate representation of the value of that technology. And so like Starlink, because you had a cheaper rocket launch technology, you were the only company who was able to launch up hundreds of satellite rockets. And then because you're able to do that, that's another $100 billion company that is about to be created because of the technology you built 5 years ago. And so is this making any sense? I don't know. I'm just totally going off on a tangent, but Trent, R&D on new multitask neural nets began in 2017. Okay, Tesla's on this massive thing. I'm totally getting sidetracked on the market crash, by the way, but I got a few more minutes, so why not? Rewriting the autopilot neural net. Trent, who commented this, my friend Trent, he's been watching Hyperchange for so long, and he writes for Seeking Alpha. Definitely read his stuff. And was really ahead of the curve about how this vision-based approach that Tesla was doing is really the right way. Actually, Waymo just canceled their service. I'm pretty sure Waymo just canceled their service. Or said that they may not do a consumer service, which is crazy. I need to make a video about that. That's the video I should have been making right now. But wow, Waymo is giving up, because they're just burning too much money and they don't think they can do it. This is why I've said several times that it's not even who's winning the self-driving race. There's only one company in the self-driving race, and that's Tesla. Rivian is about to start the self-driving race 12 months from now, and that's going to be the second company to enter it, but nobody else has even entered the race to even start building a self-driving car. That's my theory, because if you don't have millions of cars on the road with your own hardware, with your own neural nets, with over-the-air software updates of that all-in-one vertical autonomy stack, you do not have a cohesive enough strategy to get to self-driving. This is one of the hardest science projects that exists right now in the world of technology. You can't just half-ass it with a hired-in entrepreneur using a stack of 6 different companies' technologies with somebody tried to call me. Anyway, I keep going. So, yeah. And so Waymo's is stopping. I just think this is crazy. Comma AI is another one, but I don't know where I was going with this. But anyway, self-driving cars, Waymo stopping service. I just think that's crazy. Oh, the rewriting of the autonomy. So one thing that Tesla's doing that's going to be so awesome is be able to capture incremental margin. As this autonomy tech gets better, as they release self-driving for city streets, they might be able to charge $10,000 for fully self-driving, that incremental margin. This is what Pierre Ferragu and Tesla Daily were talking about. That incremental margin opportunity for partial self-driving is super there in the near term, even though full autonomy may be a while away. As they rewrite this autopilot code, like Trent was just saying, we have a clear, I think there's going to be we sort of have a lull in the cadence of updates of autopilot. I think that lull is about to die down. We're going to accelerate with cadence of autopilot updates, accelerate that value prop to consumers. Potentially in near term, maybe 3, 4, 5 months, we can get a significant increase in the FSD price because of that, even though we don't have full FSD, and that'll be, a nice incremental margin expansion opportunity. Which legacy auto company will go under first? Who will transition to becoming Samsung to Tesla's Apple? Brilliant question by Alec. I love this. GM, I thought, was ahead of the game until we saw their EV day, and it was wow, they are really behind. They are just they're not even announcing a new product. They're just coming up with a buzzword to call their new battery. So wow, GM, I thought they were ahead. They're not. Ford, I don't know. I think the impact of GM and Ford having these massive financing arms, banks basically attached to them that are like basically banks that are like loans that are securitized by internal combustion engine vehicles seems like a house of card next sort of financial collapse perspective or scenario that could occur. And so when I think about just selling gasoline cars outright, yeah, it's a crappy business, but could you cling on to that for years to come? Sure. But could there be a black swan event where the pricing profile of used internal combustion engine vehicles gets shattered because the adoption of electrification accelerates? Then all of a sudden we have the entire like Excel spreadsheet system that GM and Ford's financing businesses are built off of crumbles. Could that affect the main business very soon if we have a near-term recession? Yes. So I think GM and Ford and any auto company who's super leveraged to their financing arm could be in trouble like really quickly. But in general, I think every legacy auto company is extremely at the risk of becoming irrelevant. Like BMW, Mercedes, like I just think they're moving way too slow. Volkswagen's going all in on electric, but I don't believe that they can actually pull it off. Who would actually survive and become that Samsung S, number two behind Tesla's Apple? Like, I think it's Rivian. I think it's Rivian funded by Amazon. I think it's Apple for, lack of a pun. I think it's Google buying Lyft and doubling down on self-driving, but maybe they won't do that because they just closed Waymo. But yeah, I think Tesla is very far ahead in terms of the technology, and I'm a big believer that like you being a really old legacy company trying to reinvent yourself like typically doesn't work. Okay, I kind of got to run. I've been on live for 30 minutes. I'm getting tired. VW might. They answer the question, Alec. Tesla can buy Lyft. They don't need to. Um, did I pre-order a Rivian? Of course not. Did I pre-order a Rivian? Have you seen the Cybertruck? Like, oh my God, way better specs for Willist. Way cheaper. Like, man, can't believe you even said that. Anyway, what else should I say? What companies will stay afloat? Any company, well, the auto companies just don't have good balance sheets. So I think they're too levered. But I think a lot of these tech companies like Amazon, Apple, when I think about this market crash, they're going to be fine. They have huge balance sheets. Tesla, they raised that $2 billion. That came in clutch, man. I'm thankful they did that. Anyway, so this sums it up. Pretty savage day in the markets. We'll see what happens next. I personally think it could be a choppy next couple of weeks as we have an imminent rapid rise in the amount of cases being reported, just inevitably from more testing kits being deployed. And how that gets spun in the media, social media zeitgeist is totally unclear to me. And it could lead to more and more fear and panic and more uncertainty in the market's eyes. And uncertainty is what the market hates. And so that is it. Yes, I'm going to go wash my hands right after this live stream. But anyway, so I'm just fascinated. I'm watching this. I'm learning. I think there's a real chance this spills over and impacts the economy. I'm not as much of a believer as Elon Musk that this is just totally overblown hype. Although I do think that for now the fear of the number 19 is going to be much worse than the impact of the actual number 19. But that could change if the healthcare system gets overwhelmed. And if that happens, I think this panic is very justified. Anyway, this is Hyperchange. Let me know what you think in the comments below. And yeah, we'll keep tracking this. And I got a bunch more content coming this week. So definitely subscribe if you haven't already. I'll see y'all next time. Peace.